Hello guys, great to have you here all the way over from London. Would you do us the pleasure of introducing yourself?
Thank you, Akarsh. So my name is Riya, and I'm studying Masters in Business Finance in Brunel
Hmm.
University in London. And over to my friend.
Yeah, my name is Kamran and I'm studying Brunel University, London, and MSc Business Finance as well.
Right.
So yeah,
Nice to meet you
So
too.
we are here today. Thank you.
thank you.
Same here. So we are here
Yeah.
today to share some knowledge on finance, how it
Right.
works, and its relevance. So
Hmm.
we would like to just begin with it.
Okay, so I think financial literacy is so important to be imparted to the masses because most people may understand their skills which they are specialized in, but they may not understand how money works. Right. I would like to ask you, what is the relevance or importance of financial literacy?
So basically, as you said, that financial literacy, it revolves around money. So money
Hmm.
is the major component of finance, and it's really essential because it's all about managing money, be it
Hmm.
income, debts, savings, managing the budget. So it all revolves around finance.
Hmm.
So basically, money isn't everything, but without
Hmm.
money, there's nothing. So
Right.
every age group, be it the youngsters or the old aged people, they all require money.
Hmm.
So financial literacy is all about financial independence. So
Right.
be it any country, India, UK, USA, Canada, Australia. So every age group in every country, they require financial independence.
Hmm.
So unless and until you are aware of what finance is, we can't be financially independent.
Right.
So it's really important.
Okay. Okay. Since hiring a chartered accountant is not that cheap, what do you think should be the minimum level of income you should attain before hiring one?
I think it differs between which country you're working in. I think so.
Right.
In the UK, I see on an average, chartered accountant can
Hmm.
earn somewhere between 45 to 60K annually, and I think it grows, year by year depending on the skill and experience a person holds.
Hmm.
But yeah, on an average, if I look at in like the Asian countries, so somewhere between 5 to 10 lakh if you're earning like in a month. So that's probably a good start to go into that chartered accountancy field. And then once you have that relevant experience, you'll be earning somewhere between 20-25 lakh a month. And that depends on the country, the company you're working in, and what is the salary expectations that that company gives to that employee. So I think on an average, from the start, you can earn somewhere between 5 to 10, and that could gradually increase over the course of time with
Right.
the skills
But
and experience you have.
my question is that like you as an individual, you are running a business. So at what amount of turnover would you consider the option of hiring a chartered accountant?
I think if I'm running a company, so obviously I would see somewhere between uh, 10 to 15, I would say, depending on what that person experience holds. And
Hmm.
I think obviously chartered accountancy requires, because that person has invested so much time. I think it's like about 5-6 years that that person has invested
Hmm.
so much time in. And when he goes into that practical professional field, so I would say if I'm hiring someone, I would hire him at somewhere between 10 to 15, keeping in mind that he brings with him a lot of experience and skills to that
Right.
company. And then
Right.
he will be able to
Hmm.
help the company out and progress that even further. Yeah.
And why is it so important for schools to include in their curriculum skills such as balancing the sheets or taking loan, filing taxes? Is that taught in
So
London?
um, I haven't been in
I'm
London since
sorry.
that long.
Right.
Yeah,
Right.
but what I feel is that people here, they start earning from a very early age because
Hmm.
they know they have to be financially independent. So it's right from the very start that they know that they have to manage their own expenses, they
Hmm.
have to manage their own income. So what I feel is that it's really relevant because we practice what we learn and what we adapt, right? So it should be in our culture to manage the earnings and spendings. And it's not only about earning for ourselves. It should be that we have to, we have to save for our kids, we have to save some money for our
Right.
parents. So what I feel is that it should be a mix of both the cultures, the Indian culture, the Pakistani culture, and of the foreign culture that we are living in. So we should learn something from them, right? Because it's not only about ourselves. We are human beings. We are dependent upon each other. So our parents, they've invested so much in us. They have worked like their whole life to send us here. So what I feel is that it's not only about us, it's about them as well. And we have to do something for our kids as well. Because I'm from India and he's from Pakistan. And we have got our culture here. And what we've seen here is that, kids there, they're earning, but they don't care about their families. So I think that it should be a mix of both the cultures. That's why financial skills should be taught right from the beginning, but with values. So that's what my answer is.
And how can we differentiate between scams like Ponzi scams and investments that are actually genuine?
I think that depends on, which, fund manager you're dealing with, or which financial instrument that you're trying to invest in. So
Right.
if you go to a fund manager, to any brokerage company, and if he says that, you'll get a for sure guaranteed return on it, that means there's something fishy going on, because every financial instrument holds some sort of a risk. So with this risk, there's going to be returns in it. So if they say that, okay, you're investing this much amount of money, X amount of money, and you'll get like 50% return on it, that means there's something fishy going on. Either that person is going to be dealing with your investment in some sort of a way that you'll be going into a loss, or that brokerage is like not on in par with those financial regulatories. So these are some of the two things that you need to take into account. And obviously, when you're investing, you need to take into account two things. One, when you're investing that amount, be sure that you'd be going into a loss, because not every investor is going to earn money. And secondly, whatever fund manager you're dealing with, or whatever broker that you're dealing with, you need to keep in mind that that information should be aligned when you're trying to invest in some sort of an asset. So yeah, go for investment. That's a good thing, but keep in mind that every instrument has some sort of risk. Yeah,
Right.
that's
And
something
I
to keep in mind.
also read some really good advice that if you want to invest through a financial advisor, so you should check his balance record, because how he performed in his personal life. Yeah.
Obviously,
Right.
track record is really important. And I think especially the company or the brokerage, what sort of instruments they're investing in, and what is the past record, and especially the broker. I think the trust of the broker is really important, because once you invest money in, because you invest money into that fund manager, not the instrument. That's something which a lot of people don't really focus on. So once that trust is broken, so obviously that would lead to a kind of a negative impact on the fund manager and as well as the brokerage itself.
So is it a good idea to invest in stock market or bonds without any guidance?
Obviously not. So basically, when we see advertisements and about stock markets, they say that they are subject to market risk. So stepping into something you're not aware of would be really, really foolish. So proper market research, or just hiring a financial advisor, and just taking relevant measures, so that you have relevant knowledge about what you're going to do, is really important. And I feel that investing is a good option, but with relevant knowledge of the market. And if we want to invest in a stock market, a proper research is required. Just do your homework, proper knowledge of the stuff, and reading, and obviously patience is required. So it's not only your luck or instinct that you should go with. It should be proper research. So if you're so eager to invest into something like stock markets, which are which hold a very high degree of risk, so you should have relevant knowledge of the stuff. So it's not only that you are just having money and you just want to invest in it without having any knowledge. So if you can bear the losses, you can do whatever you want to do. But if you want to have, if you have modest money and you want to invest into something that you want to pay off well, you want good returns, so just hire advisor, just check the records and everything. And that's how we can go with it.
Right. Okay.
Yeah.
how important is the practice of compounding money?
I think by definition, compounding, if you look at it, it's when you're having a considerable growth in your investment
Right.
over a course of time. And in terms of patience, if you look at it, so patience,
Yeah.
they say that sabr ka phal meet hota hai. So when you're investing in
Mm.
some sort of a asset, you need to be very mindful that it's not gonna give you that return at that short period of time. I think it's gonna
Mm.
take quite a long process in order to get your returns back. And you've like me like I said, investors, when they're investing money, they go for like long-term returns. On the other hand, if I'm an investor, so I would go for a short-term investment. Why? Because in that particular time frame, the market is so volatile that
Mm.
obviously if you wait for a longer period of time, your investment is going to fall down. So I think it's best that you need to be very patient and go step by step when you're investing in some sort of an asset. So I think patience is the greatest virtue, and compounding is when obviously you'll get considerable returns over a course of time. So I think it's something that you need to be very mindful of when you're investing
Mm.
in.
Right. Okay, but what if you invested in a stock, let's say, and it is going down? So you see
Yeah.
the red flags. So would you like back up, or would you just be patient?
I think that depends on two things. That depends on either the technical analysis that you do
Right.
or the fundamentals that's going on in the environment. So if you look at from an economic point of view, what sort of economic circumstances are changing in the environment?
Mm.
And from a technical point of view, what sort of analytical abilities or the analytical skill set you've applied on your trading,
Right.
platform, which allows you to actually see what sort of investment has gone up or down with the time frame. So if you're investing in, like, for example, a 5-minute time frame, so the volatility would be higher as compared to when you're investing in like an hourly
Mm.
time frame, because
Right.
in the 5-minute time, the graph is going to go up and down like
Right.
heartbeat. But when you're in an hourly time frame, so
Mm.
you're going to see the graph go up, be stable, and then go down. So that's a
Right.
long-term investment. A short-term
Mm.
investment is subject to volatility. So
Mm.
just hold on and don't panic, I would say, and just try to
Mm.
look at both these aspects, fundamentals and technicals. Yeah.
Mm. Okay. So how hard it is, and what are the measures that can be taken to maybe extract people who are poor or homeless out of poverty?
So basically, we can talk about two aspects here. The
Mm.
first one relates to the developing countries, and the second one relates
Mm.
to the developed countries. So in case of the developing countries like India, with such a
Mm.
large amount of population, so there can be various reasons that people are poor. It can be illiteracy, it can be that people don't want to come out of it, or it can be
Right.
the lack of government initiative, right? So basically, people in India, they have their own answers to every solution. So they think that if they're poor, if they have more children, so they'll have more
Mm.
earnings. And ultimately what happens is that these children, they are not educated at all. So what happens is that they just go into child labor. So
Mm.
ultimately this circle just goes on, and it's never ending. So
Mm.
even if government tries to take some initiatives, it's
Mm.
not successful because there's no proper implementation as well. It's not only the people that are stubborn, it's the government as well. If a particular scheme is taken out, so it's not implemented properly.
Mm.
They just have an overview of the short run. They don't keep in mind that what consequences it would have in the
Mm.
long run. For instance, in India, I think in 2016, demonetization was,
Mm.
an action was passed out, a decision was passed out by our prime minister. But there was an overview that it would have a really good result in the long run. The short run, it was completely ignored. That's what happened. Then GST was implemented,
Mm.
and then COVID happened. So if
Mm.
we see through the eyes of people, it was a complete disaster, because
Right.
Modi didn't know that COVID would happen. It was done with a good mindset that it
Mm.
would be good for curbing out the black money, or it would be good for inflation cutting out. So it's just that there's no proper implementation. They didn't
Mm.
take care of the natural disasters that would have happened. So that's what relates to everything. There's a vicious circle that is going on.
Mm.
There is no proper supervision of everything. That's what is happening in UK. Whereas there is poverty as well. Being a developed country, poverty is everywhere. But what
Right.
happens there is people are in a vicious circle here, but they are dependent upon the government. So that's where the difference lies. So I feel that to get out of it, we need a proper implementation, be it on the part of people or be it in the part of the government. So yeah.
Do you think generational poverty could also be a result of the efforts made by the rich and powerful to stay rich and powerful and widening the gap?
Yeah, obviously. See, if I belong to a strata of society that's really
Right.
rich, so in India we say that हमारी तो इतनी पुश्ते खा सकती हैं when if we are so rich. So yeah, obviously, if my dad has a business that's really, really good, then I won't, make those many efforts to earn. But if I know that my dad is a laborer, or if my family business, they are very poor, so people don't try to come out of it. Out of 100, only 20 would try to come out of it. Other 80 would accept the fact that this is their life. So that's the mindset of the people. That's there in India. But many are trying, but it's not the full implementation. I think government can take many measures to do it. They are taking it, but as I said, there's no proper implementation. People are still stuck in the vicious cycle, and it's impossible to get out with such a large population. So all of these aspects, they can only be, cured when there's an effort on both sides. No one single person, no one single community can do it.
Right. Okay.
Yeah.
Policies like scholarship and inherent tax are ways by the government to even out the odds, I would say, between the rich and the poor. So do you think that it is working?
Like in terms of inheritance tax, I would say that that comes at a cost of when someone is already dead. So when that person is dead, you get that wealth, and that concentration of wealth kind of decreases, and you have that equality of income. But at the same time, what I've seen is that scholarships, yes, they tend to have some sort of a short-term effect, but that tends to be at a cost of investing so much time in, and that hard work that needs to be there. I think what the government should do is that they should come up with certain policies in order to maintain. All right, so we have this kind of a society, and that's not doing really well. So let's come up with something that does not have a negative impact on the poor, because we've seen that over the course of time, the rich are getting richer, the poor are getting even worse. So it's the survival of the fittest. So like scholarships or like inheritance tax, yes, they might help, but in the short run, I think what the governments in different countries, what they need to do is that need to come up with certain policies. They need to get imposed like taxes on the, I would say, the rich or the businessmen, and just collect those taxes and then distribute to the poor. I think by coming up with different schemes, we have seen the government tries to win the support, but at the same time, it comes at a shorter period of time. So you won't get that result. You need to have a strategic plan in place. And then obviously years pass by, and then finally you would see some action in place.
And I'd like to add on something. The amount of scholarship, they are too few, and the amount of kids or children or students, they are way too much. So it's difficult to match it. And see, when I was supposed to come here, even I applied for a scholarship. So it's not only about the poor or the rich or the middle class, so anybody can do it, right? So what I feel is that the amount of students who applied for scholarship, they were like in thousands, and the number of scholarships, they were like in tens, 50 or 60. So I think that amount should, it should be increased a bit, so that, people get a chance, because everybody is earning, to a certain amount, and they work really hard for everything. So I feel that, and I should be, we should keep an eye even on that. The governments or the institutions, they should even widen their scope even in this matter, so that everybody gets a chance. It's not only that some amount of children, they should only get the scholarships, or it depends upon the academics. Governments, they should make separate departments, so that everybody gets a chance. It's not only a certain amount of students that should be into it. It should be that everybody, they should at least have some chance, so that they can make their future better. Scholarships, they are
like a lottery system.
Not a lottery system. sorry, not a lottery system. So it should basically be that they should at least increase the amount of scholarships. That's the best they can do. It's not only about that if a person is getting like 60% or 70% then only they are eligible for scholarships. They can at least give out them more viewpoints that even these children can apply for scholarships. So that's what it should be. In all the
Maybe,
countries, not only in the
yeah,
UK or in India,
yeah.
in all the countries.
Hmm.
They should
Right,
at least widen their horizon, that at least we can at least give out more categories for scholarships. That's what my
hmm.
point is.
Right. So what are
Yeah.
the what are some of the books that you may recommend, not to only people who are aspiring businessmen, but normal people also? I mean, lay persons who want to handle money. I mean, everyone does.
I know.
Yeah.
So basically, finance, it's required by everybody. It's not that who are doing
Hmm.
finance or who just, doing business, only they require it. So it's required by
Hmm.
everybody in everyday life, right?
Hmm.
So some good options for beginners can be How I Invest My Money by Brian Portnoy. So it's all about saving, investing, and spending, all those basic concepts. So they can just, go through it, understand the fundamentals, how things work in the
Hmm.
everyday life. So next good option can be Your Money or Your Life by Vicky Robin. So it's all about the money relationship and the financial independence that we've been talking about all this while.
Hmm.
And if somebody wants to just go on an extensive research,
Hmm.
they can go in for Getting Out of Debt by Michael Steven. So it basically deals with how people can get out of the debts, if they are not doing good with, money. So how can they get out of it? How can they deal with their finances?
Hmm.
So these are my suggestions.
Speaking of that, I would like to ask you that the habit of using credit cards so often, what advice do you have for
Stop using
people?
it.
Yeah,
Stop
just stop.
using it.
Yeah.
So basically,
Right,
it all starts from managing finances. So
right.
when people get a habit of using their credit cards,
Hmm.
so at the same time, government has given us, or governments have given us this opportunity that you can use credit cards or stuff. So it should be according to your pocket. If you know that
Hmm.
if if you've taken a loan from a bank, or if you're just using your credit limit, so only use it to a certain extent that you can pay off it. You can pay it
Hmm.
back. So it's all here, it's all in the
Right.
mindset, and it's all in your pocket. So that's
Hmm.
that's how it should be. It should, unless and until you have a knowledge of your finances,
Hmm.
how you're going to manage your income and expenditure, your savings, and how you're going to invest it. So it's all about that.
Hmm.
So people should at least have a control. कहते हैं ना कि you should, मतलब आप अपने pocket के according spend करना चाहिए, right?
Hmm.
So unless and until you think, yeah, I can spend this much, I can do this, I can do that, just do that much, how much you can pay it off later.
Hmm.
So it's all in the mindset, it's all in your pocket. That's what my answer
Hmm.
is.
Right. Okay. Since it is such a new concept, right? Uh, I think it will be relevant to talk about cryptocurrency.
I think cryptocurrency, what I've seen is like by definition, if you look at crypto, it's a form of digital currency, right? And you use like the concept of cryptography to secure transactions. At a current, there isn't any regulatory system which allows cryptocurrency, but we've seen that it has a decentralized system intact with the current banking system. Crypto, I would see as a form of high risk, high return. Is that simple as that? Because I
Right.
think it started off way back, like 20
Hmm.
odd years ago, when there wasn't any concept of like a person holding a digital wallet or a person holding a digital currency. And then, like in 2022, we've seen some of the big short companies, especially I would mention Elon Musk, right? And Elon Musk, I think one of his tweets, when he was supporting Dogecoin, so he would say that this market is going up, this market is going down. With that one tweet, the market would actually be shifting towards the up or down. I
Right.
think as of today, cryptocurrency market is going down. We would eventually see a rise next year. But I think when you have to introduce some sort of a currency in place, you need to have a central body system
Hmm.
intact, because no, we haven't seen countries having a separate regulatory system, a central bank that allows the form
Hmm.
of cryptocurrency. Yes, Elon Musk said that, I would be using cryptocurrency as a measure
But
of
he's
payment
Elon Musk.
when you. But he's Elon Musk. He can do anything, right?
Yeah.
So he can do anything. He can go to the moon. He can, just create
Yeah.
Starlink, whatever not.
Right.
So, but I think by definition, I think you have to be very realistic. I would say crypto has a future, but I think somewhere down the line, NFTs, the concept of NFTs is going really strong. I would say people are investing in memes and art, like for like about millions and billions. I think I would say it's okay, but I think realistically speaking, if you look at, if you talk to some of the people, I think about 60-70% would say it's going to take at least like 10 to 15 years to actually have that, standing in that market. And crypto is like this one coin, right? And you have bits and pieces in it. So if you look at Bitcoin, by definition, Bitcoin is not a coin itself. It's like a piece of crypto.
So it's okay, that will keep growing.
Yeah, it's going to grow. And I think its market is in billions. So I think I was looking at the Bitcoin market. It was like somewhere between 800 billion market cap. Then you had Ethereum. Then you had Doge. Then you had Cardano. All of these, like they are bits and pieces of crypto. And yes, it's good to invest because it has like 0.0001 something. So it's like in many cents, right? And if it goes to $1, then you will have a major shift. Or I would say 1 cent. $1 is like too much, I would say, but like 1 cent would actually make an impact on that whole market. So it's going to take time for crypto to actually have that footing.
Invest in a modest risk.
I think what I would say is just invest in like mutual fund. That's kind of like the simplest form of investment. Or go for like gold. What? Sorry?
How come mutual fund is
I think mutual fund is basically when it's a type of investment when you have different investors coming in, they're chipping in some money into a fund, right? And you're having like substantial returns out of it. So in terms of crypto, when you're investing money, since the market is so volatile, it's so subject to high returns, you won't get your investment back. Whereas in mutual funds, obviously when you're investing in money, you're not investing the whole amount, you're investing a piece of it. So if you have 7 to 8 investors, so those 7 to 8 investors, the risk is going to be diversified, the returns are going to be substantial. So I'm going to, if I'm like fund manager and if there's someone that's new to this financial market, I would say just invest in a mutual fund. Or if you want to invest in like commodities, I would say gold, because gold, as of today, the prices are going high. It's a safe haven asset, I would say, and invest in gold. I would say invest in oil as well, because oil is going to be pretty expensive down the line. By 2050, we have like an aim going net zero sustainability. That's really good. But a very few people who actually have like oil stocks. So those people are going to be very rich, I would say. So like invest in oil as well, if you can.
I'll do it.
Invest in oil as well. So yeah. So
last question that I have, right? Last question that I have is why is it better to compound your savings in your 20s than later in your 30s?
So I feel that the earlier it is, the better it is, right? So it even depends upon how early you're starting to earn. You can only save when you're earning. You're not going to save your parents' money. Exactly, because ultimately it's not your money. Okay. So the earlier you start earning, the earlier you start saving, and you can even invest the saved money. So it's basically that you will get more returns in future. If I start saving in my 20s, then at least I would have some amount of money by my late 40s. But the later if I start in my 30s, then obviously the return would eventually, it will decrease. It would not be that amount, right? So basically, the power of compounding comes into effect when you start saving at an early age, right? The more you earn, the more you're trying to invest, and the more money is compounded in the terms of returns. So basically, the early, the better. That's what my answer is.
As you grow older,
exactly.
you'll value money, right? I think it's best, you should start saving early, and
exactly,
it's good that you'll have that time to have that money.
So self-discipline has a very powerful role to play in earning money, right? Patience, self-discipline.
I think, yeah, patience, self-discipline, being consistent, being fruitful. Because look, at the end of the day, when you have, if I have so much money, right? So I'd be very confused. Because why? Because I don't know what asset or in what
Hmm.
instrument I want to invest, right? If
Hmm.
I have so much money, so I'll be investing in God knows what sort of asset, what sort of instrument, and then
Hmm.
turns out I'll be losing all my money. So when you're into this market, so the only thing that is really important is information. I think information, that what you get from the market, what you get from your
Hmm.
broker, what you get from your fund manager, and that information it needs to be very important. And
Right.
yeah, if you have that kind of information, you'll be able to invest wisely. You'll be able to invest according to the type of return that you want to get. Because we have seen investors, they become greedy when they earn,
Hmm.
when they get
Hmm.
those returns. Don't be greedy, be wise, I would say, when you're going into this market.
So obviously, it brings us to the main topic, financial literacy and financial skills and financial management. Unless and until we are just aware of these terms and this concept, we can't just do all of this that we're just talking about right now.
Hmm.
So obviously, if unless and until you know what is money, where your money will go, how much you're going to earn, how much you're going to spend, how much you're going to save, how much you're going to invest. So all of these disciplines, they all have to be together,
Right.
so that we can make a wise decision. And
Hmm.
it should start from a very early age. It should be taught in schools. It should be in us. It should be adapted by us from a very, very early age, so that
Hmm.
we can have a better life, a
Hmm.
better future for ourselves, for our kids, for our parents. That's it.
That's a very good point you raise, because if you have the capacity to earn a lot of money, but then you just earn it and you blow it all in some thing like
Yeah, there's
Ferrari
no.
or something, there's no
Yeah,
point, right?
there's no point.
Yeah.
I think it's best
Because
that,
yeah.
peso ki qadar, like what I said earlier, happens when you're living kind of alone, I would say. Because when you're living with your family, it's
Hmm.
like, the father is there, he's going to
Total
support you
service.
through.
Yeah.
He's going to give you like, car beta ye gaadi ki chabi jahan tumhe jana chaha, and he's going to give you like pocket money, everything. But when you're living alone,
Hmm.
you obviously peso ki qadar aapko tab aati hai. because
Exactly.
because you have to pay your bills, you have to go, you have to travel, you have to buy groceries, so whatnot. So
Hmm.
peso ki qadar, I would say, comes when you're living alone, when you're
Hmm.
away from your family. Obviously, oh yeah, it's
Exactly,
very
because
true.
see, कहते हैं ना कि people are like money, they are money only.
Hmm.
कि लोग ही पैसा है, और लोग और पैसा आपस में रिलेटेड भी हैं. जब लोग पास होते हैं उनकी कदर नहीं होती है, ऐसे जो पैसा पास होता है ना उनकी कदर नहीं होती, जब नहीं होता तो कदर होती है. So
Hmm.
इसीलिए we should value money, we should value people. That's the
Right.
whole concept.
Yeah.
Yeah.
It's very
I just hope
informative
that
to talk. Yeah. Sorry.
exactly. I just hope you had a good time. You just invested in us, so I just hope
Yeah.
we just gave a good contribution to it.
Yeah,
That's
you
it.
definitely did. Right. I'll just stop the recording.
Yeah,
Yeah.
that's fine.